Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money moving world with a little bit of sass and a whole lot of clarity. You know how sometimes companies just announce they're going to do a buyback and it's all very corporate speak? Well, today we're diving into Bank of Marin Bancorp's latest move to get more shares of its own stock. You might be thinking, why would a company buy its own stock? What does that even mean for you as an investor or just someone curious about how business works? Let's break it down. Before we dive in, if you like getting straight to the point analysis without all the fluff, make sure you are subscribed. And hey, we've got a fantastic community over on Discord to dive even deeper into these filings, so give that a look in the description below. Alright, so Bank of Marin Bancorp, the parent company of Bank of Marin, has announced a new plan to buy back its own stock. Now, this isn't just a small announcement, it's a significant move to repurchase up to $25 million worth of its common stock. They've set a deadline of July 2027 for this buyback program. This new plan is actually replacing an older one that's set to expire soon in July of 2027 for this buyback program. This new plan is actually replacing an older one that's set to expire soon in July of 2025. So what exactly does buying back stock mean for a company like Bank of Marin Bancorp? Think of it this way. A company has a certain amount of its own shares floating around in the market. When they decide to buy back shares, they're essentially taking some of those shares off the market. They can do this in a few different ways. This filing mentions they can buy them through what's called open market transactions, which is pretty much buying them on the stock exchange like any other investor. They can also do block purchases, which means buying a large chunk of shares all at once. And then there are privately negotiated transactions where they might deal directly with a large shareholder. The core idea behind a buyback is that the company believes its stock is a good investment. By reducing the number of shares available, the company is essentially increasing each remaining shareholder's ownership stake proportionally. If there are fewer slices of pizza and you own a slice, your percentage of the whole pizza just went up. So for Bank of Marin Bancorp's common stock traded under the symbol BMRC, this buyback could potentially boost the value of the shares that are still out there. It can also be a signal to the market that the company is confident about its future financial performance. When a company does this, it often means they have excess cash that they don't immediately need for other investments or operations, and they see buying their own stock as a good use of that cash. Now, the specific details around how many shares they'll buy when and at what price are really up to the company. The filing makes it clear that Bank of Marin Bancorp will decide on things like the timing, manner, price, and the total amount of these repurchases. They'll be looking at things like the current stock price, how much the stock is being traded, the overall economic conditions, and of course how the company itself is doing. They even mentioned the possibility of using a trading plan. This refers to a specific rule that allows companies to buy back their own stock, even when they might have what's called insider information. Basically, it's a pre-arranged plan that helps them avoid accusations of trading on non-public information. It's a way to keep the buyback program running smoothly without running afoul of insider trading rules. It's important to remember, though, that this program can be stopped or put on hold at any time. They're not obligated to buy any specific number of shares. It gives them flexibility. Now, while this filing is all about the buyback program and what it means for the company and its shareholders, there aren't any specific financial tables directly in this 8K report to analyze. This particular filing is more of an announcement of a corporate action. The core of the filing is simply the announcement of this new $25 million share repurchase program. It's a forward-looking statement about how they plan to manage their capital and hopefully enhance shareholder value. We don't have the numbers from this specific report to tell us if they are doing well or poorly, but this buyback signals a certain confidence from management. The report is signed by David Bonacorso, Executive Vice President and Chief Financial Officer. This means the company's top financial executive has reviewed and authorized this announcement. It's standard procedure, but it does put the weight of the company's financial leadership behind this decision. So what's my take on this? Bank of Marin Bancorp is clearly looking to return value to shareholders. A $25 million buyback is a substantial amount for a company of its size, and it shows they are confident in their ability to generate cash and believe their stock is undervalued or at least a good investment. This can be a positive signal for investors because it suggests management is committed to increasing the value of each share. However, it doesn't guarantee success. The effectiveness of a buyback really depends on the company's underlying performance and whether the stock price actually increases as a result. One thing to keep in mind is that while buybacks can be good, they can also divert funds that might otherwise be used for growth initiatives like research and development, or expanding into new markets. So it's a balancing act for any company. For Bank of Marin Bancorp, this move indicates a strategy focused on shareholder returns, perhaps in a market where they see limited profitable growth opportunities that would yield a better return than buying their own stock. The key risk here is if their core business performance falters while they are focused on financially engineering the stock price. On the other hand, if the banking sector continues to rebound and interest rates stabilize, Bank of Marin Bancorp could see its buyback strategy pay off handsomely. Ultimately, this is a company making a strategic decision about capital allocation. They're betting on themselves and using their own money to invest in their own stock. It's a classic move in corporate finance. Alright, that's our breakdown of Bank of Marin Bancorp's latest filing and what this share buyback announcement means for you. What's your take on these kinds of company actions? Are they always a good sign, or are there times to be wary? Drop your thoughts in the comments below. If this deep dive into corporate finance was valuable for you, please hit that like button and don't forget to subscribe for more regular insights. And seriously, check out our Discord community linked in the description. It's a great place to discuss these things further. Thanks for watching. See you next time.